Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, Product Development Specialist with Nasdaq Index Research, to discuss the Nasdaq Next Gen 100 Index, which coincides with the launch of the QQQ Invesco Innovation Suite. Within the Innovation Suite, Invesco launched an ETF that tracks the Nasdaq Next Gen 100 Index. Mark, tell us more about this particular index and how it's performed.
Thanks, Jill. Great to be here on a very momentous day, as you mentioned. We actually launched this index a little under 2 months ago on August 24th, and then, of course, the ETF tracking product launches today. So far, seeing great volumes out in the market for that product, which is a good omen for for its progress in raising money. So, in developing this index, pretty straightforward methodology, just like the Nasdaq 100, essentially. Instead of doing the 100 largest non-financial companies listed with Nasdaq, we do the next 100 largest non-financial companies. So actually pretty easy to backtest that. We ran the backtest going back to about December 17th, 2010. And as you can see on this first slide, what we're comparing here is the Next Gen 100's performance. Again, back tested from December 2010 through August 2020, and then live performance after that. Very, very favorable compared to both the S&P Midcap 400 as well as the Russell Midcap Growth. In total, seeing about 270% net price performance over the course of the back test length. You've got the Russell Midcap Growth just over 200%. And then the S&P Midcap 400 just over 100% over the same time frame. So not quite matching the Nasdaq 100. Very tough for any index to do that over this time period, but not far behind.
And Mark, if we look at our next slide here, we can see the kind of sector exposure that this particular index has. Is it similar to Nasdaq 100?
Yeah, so there are a few differences. Again, no financials. That's sort of the big thing that they have in common methodologically. Tech, you can see, is only 35% of the index here, whereas the 100 tends to average. The Nasdaq 100 tends to average around 55 to almost 60% tech. So it actually is a bit more diversified in kind of doing the research around this index launch and the product launch. That's one of our main messages to folks, is that not only is this giving you exposure to a different cap spectrum, right? Companies that are either on the cusp of becoming large caps themselves and possibly getting added to the Nasdaq 100, or the companies at the lower end that are your kind of true mid caps, true kind of growth and innovation companies that tend to be in tech, but also we see a lot more in terms of healthcare and industrials, which is more than a third of the index here. That's just not something you've seen with the Nasdaq 100 for many years, that level of exposure.
All right, Mark, and walk us through the last 3 slides here. And I think this is my favorite part about it, where we're seeing that significant investment with R&D. And of course, as with Nasdaq 100 companies, that R&D is what sets these companies up for future growth.
Yeah, I mean, look, we say it a lot here. We say that the Nasdaq 100 is the home of innovation and growth for large cap companies globally, and it's backed up by the numbers, right? It's backed up by not just reported R&D expense, but also things like looking at patent filings across all the different disruptive tech thematic areas that we track. This first one is straight from the financials, right? It's showing you year over year what's the percent of total company revenue within the index that is spent on R&D. Clearly, you can see here the Next Gen 100 is blowing away the competition. Most recent year, 2 to 3 times what the competitor benchmark midcap indexes are showing. And then on the next couple slides is just a different way, again, to think of it, not looking at financial filings and R&D expense, but actually looking at patent filings. And as we can see, when we map this out, we see that there's 38 companies in the index that just within the last year filed at least 1 patent in one of these kind of 35 disruptive tech thematic areas that we track with our external product partner, 26 of those sub-themes were active in the last year. And you can see for something like nanorobotics, fully 10% of global patent activity in that global equity universe that we track. Of about 9,000 firms, 10% of those patents came from the Next Gen 100. So pretty impressive. The chart on the right shows you what is the number of NGX companies, that's the ticker for the index, versus the number of themes that they're involved in. So if we look at, for example, all the way on the right, you've got Zebra Technologies. They filed patents in 11 different disruptive tech areas. When you average it all out across the 100 companies and the 38 that filed patents, you see they're in almost 4 areas in terms of patent filings on average, close to 3.7. What does that all mean when you're, taking a look at, again, those mid-cap benchmark competitors? The last slide shows you that differential, right? Average number of sub-themes per active company. Nasdaq Next Gen 100, again, at the top with 3.7% of constituents that have patent activity. Again, at the top at 38% versus much lower numbers for those competitors. So we feel very good about this index, really taking the torch from the Nasdaq 100 and kind of, extending it into this mid-cap and lower large cap range of companies. Very, very exciting.
Yeah, certainly an exciting day for sure, Mark. Thanks so much for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.